Best moments that we cannot forget in the crypto market was the bullish run of crypto prices in November. If it was possible to live in the past, many would have taken that step. Perhaps there is something that we can do to bring back the gains of the past, and more, especially when it comes to Cardano ADA. Yes, there is. With a steady climb in value, Cardano ADA could be set for an auspicious moment. Most of Cardano's updates that were expected to trigger bullish and sustainable runs could not resist melting down the drain. Various Cardano experts have tried their best to connect bullish Cardano price predictions with important announcements of upgrades in the ecosystem, and so far, this has only led to short-term profit. Do you remember what happened in the days leading up to the Cardano's hard fork? There was an ADA price prediction, and that was in 2022. Dubbed Vassal, the hard fork was supposed to go live in June of 2022, but was delayed until the last week of July over several outstanding bugs. Vassal was expected to bring significant performance and capability upgrades to the Cardano blockchain, including faster block creation and higher transaction speeds. From a fundamental perspective, the upgrade could boost ADA adoption due to improved network efficiency. However, even at this point, Cardano has had a history of logging sharp price corrections after most network upgrades, suggesting a prevailing sell the news sentiment in the market. And the same thing happened in 2021. For instance, the blockchain's Alonzo upgrade in September of 2021 partly prompted ADA to rise over 200% to its record high of $3.16 before launch. But after the upgrade, the Cardano token fell by more than 85%. For the Vassal hard fork, ADA rose by only 25% after bottoming out locally at 38 cents on May 10th, suggesting that Vassal's impact on the market has been limited. Not everyone was convinced though. It was at this moment that the crypto analyst Lark Davis believed that the token would rip after the hard fork. This is the gist. Bullish events always signify looming price runs in the crypto market. However, recently, this has not been the case. We are even at the point that believing that approval of a spot Bitcoin ETF has nothing to offer the market in terms of prices. It is cool to ask whether there is any point in hanging bullish predictions on the ropes of interesting events. Despite the influx of substantial capital in these new spot Bitcoin ETFs, with a crypto analytics platform reporting $1.18 billion in inflows into digital asset ETFs globally, the expected positive impact on Bitcoin's price is yet to materialize. This spurs questions about the underlying mechanics of these ETFs and their influence on Bitcoin's value. The recent price run-up picked up steam when BlackRock announced their filings for a spot Bitcoin ETF on June 15, 2023. At that time, Bitcoin's price was around $25,000. Subsequently, there was a 70% increase of around $42,000, where it essentially traded sideways. As the ETFs launched, Bitcoin spiked to $49,000, but sold off rapidly to around $42,000. Looking at the chart, it is reasonable to suggest that perhaps Bitcoin was overbought at above $44,000 for this point in the cycle. Something interesting is that the first day of trading for the Bitcoin ETF had a lot of excitement, but in the days after, the price took a hit. This unimpressive performance is making people wonder if there's a strong demand for these types of products in the market. Bitcoin was doing well, going up $49,000, but it couldn't reach the crucial $50,000 target. We saw a sudden drop of about 16%, surprising many traders. Despite the ETF approval, the market sentiment changed quickly, with retail traders thinking the price would go up, were caught off guard by a correction. It is quite interesting that liquidations were not as big as expected during this drop. Around 18.8 million in short positions were liquidated, but it wasn't as significant as people thought. The news made traders overly optimistic, overlooking the potential correction. Bitcoin is now around $42,300, holding the weekly support and mid-level of a horizontal range, thus suggesting a possible local top. This turnout has equally raised questions about a larger correction. And it's important to note that the market is gradually moving away from being excited about spot Bitcoin ETFs. Now people are talking more so about the possibility of a similar product for Ethereum, and this switch of interest is affecting the price of Bitcoin. Bitcoin's price went up for several days before the ETF approval, but there's a chance it might fall below the $40,000 support level. Regarding the ETFs, a significant portion of Bitcoin remains unmovable, locked in long-term holdings or lost wallets. Over time, the scarcity of liquid Bitcoin could influence market dynamics significantly, according to experts. Grayscale's Bitcoin holdings and fee structures are notable in this ecosystem, with its higher fees compared to its competitors. Any redemptions from Grayscale's could release Bitcoin into the OTC market, influencing average prices and market dynamics. There is around 29 billion Bitcoin in Grayscale ready to be sold into other Bitcoin ETFs, which in of itself is a lot of liquidity. This interplay between different ETFs and their pricing mechanisms accentuates the complex nature of Bitcoin's market. The current market state, which is significant inflows into Bitcoin ETFs and no proportional increases in Bitcoin's price, is attributed to the delay in average pricing mechanism of ETF trading. As noted earlier, this phenomenon, coupled with institutional players operating under different rules, raises questions about market efficiency and potential manipulation. Also, Gary Gensler worked tirelessly to ensure that investors were protected when investing in any Bitcoin-related product. The ETFs are so clear and transparent, with no possibility for price fixing behind closed doors, and everything is out in the open like it is on the transparent open ledger that is Bitcoin itself. Well, right from the start, we were warned not to get too excited. Last year, BlackRock's filing was instantly followed by several other major Wall Street companies, including Fidelity, also wishing to create their own Bitcoin spot ETFs. These Wall Street gains even rolled out their centralized crypto exchange EDX. Both of these factors pushed Bitcoin's price up high, allowing it to regain the $31,000 level. Bitcoiners on Crypto X include big names such as Anthony Pompliano, instantly began praising BlackRock for endorsing Bitcoin and its new level of adoption and interest from institutional investors. This was when a crypto analyst, Dan Gambardella, took to X to criticize the Bitcoin advocates since they were not praising Bitcoin for decentralization or freedom from the manipulative thieving banks, but for the fact that BlackRock is now holding a huge Bitcoin bag. Perhaps we'll lean to refine our expectations next time. Our spot Bitcoin ETFs could be set for the next big thing. How we appreciate this possibility determines how the rest of the year will be for cryptocurrencies, especially those like Cardano ADA. It is in the top 10 cryptocurrencies by market cap, driven by many important factors to a successful sojourn throughout the year. By December of 2024, the ADA coin price could hit its previous all-time high if all bullish factors align properly. In the previous year, Dan Gambardella forecasted that Cardano ADA might reach $11 in the upcoming bull cycle. Such an increase would push the Cardano market cap to over $400 billion. He equally noted that Cardano's ADA was lagging behind Ethereum by one cycle. According to him, Cardano crypto surpassed $3 during its last bull run without network upgrades and high adoption. Looking ahead, Gambardella expects several factors to influence Cardano's value in the next bull market. Furthermore, he tweeted to share why he continues to believe in ADA and its bright future, hoping that it will ultimately begin to outperform the rest of the crypto market. His tweet read, "Let it be known that #Cardano underperforms in bear markets and outperforms in bull markets. This is the exact recipe that excites me about ADA, perfect ingredients for any value investor. All this without even mentioning the fundamentals and DeFi season which is upon us." On April 6th of 2023, Dan Gambardella took to X to share his intuition on ADA's coin price and said that ADA holders are going to enjoy big rewards. He tweeted, "There are zero guarantees here, but my intuition tells me that all the ADA holders who have endured the last 1.5 years are going to be heavily rewarded. Notwithstanding, we are going to enjoy the massive gains of spot Bitcoin ETFs too. The run has not started just yet. And let's refer to a blog post by Arthur Hayes, the founder of BitMEX, who made a bold prediction regarding the potential impact of the approval and success of a Bitcoin spot ETF. Hayes suggested that the Bitcoin spot ETF gains significant traction, it could lead to a shift in price discovery from the east to the west, disrupting traditional financial markets. Acknowledging the immaturity of Bitcoin during the 2008 financial crisis, Hayes contended that the cryptocurrency and the broader crypto market have proven resilient and capable of weathering severe crises, as demonstrated in 2022. The narrative shift to the events of 2023, when the Federal Reserve's attempt to tighten financial conditions led to the failure of several US banks and significant disruptions in the crypto market. Hayes underscored the contrasting resilience of decentralized assets like Bitcoin compared to centralized entities that face bankruptcy. And we should not expect less in 2024. For Cardano ADA and for every crypto out there. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.